Palisade Radio is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Delighted to have Mr. Eric Sprott back on the program. We had him on about 2 years ago. He's, of course, the chairman, founder, and largest shareholder of Sprott, Inc. Eric, welcome back to the program.
Hey, Colin. Very happy to be here.
I'd like to start off with a brief reminder for audience members about the upcoming Sprott Natural Resource Symposium in Vancouver, coming July 26th until the 29th. Palisade Global will be in attendance, and I urge all of our listeners to come out and enjoy some great networking and absorb all the information that will be presented there. Eric, let's start out and not beat around the bush here. 2016 has been pretty exciting so far for gold investors. How would you rate the beginning of this bull market thus far?
It's almost laughable. I could almost say it's been a good decade based on the first 6 months performance. I mean, the average gold stock's up something like 160% here. And I was reflecting on, me being on your show 2 years ago, kind of wondering what I would have been saying at the time. I probably said, I can't believe how cheap some of these gold mining stocks are. It's going to be a great opportunity here. Price of gold should be going up, and the return we're all going to make is going to be spectacular, which is the same theme I had, of course, all for 15, and I have even today. It's been stunning what's happened to the gold shares. It's been stunning what's happened to gold and also silver. I've always thought that silver would outperform gold by a dramatic margin. It looks like that might play out here. So, I mean, we've had the best of all worlds. There's only one thing we're missing, and that is sort of a bank failure, because that's truly what should make people go to gold. But I don't think we're going to see a bank failure, because I think the powers that be know exactly what a bank failure would do, and they're going to do everything to prevent it. So we always have to sort of read around the edges of, how bad things really are and why we should really be in gold and things like that. So. But everything is kind of playing out the way we might have imagined so far this year.
Well, I had Rick Rule on the program just a few days ago. Always a great conversation with him. And one thing that we discussed is that you had this negative correlation in place for quite some time between the gold stocks and the general equities. And therefore, if we had a sell-off like we had in 2008 in the Dow Jones, it was conceivable that the gold stocks might not drop very much because they're already so low. But now I kind of brought up the question, well, what if we have these gold stocks continue to rally as they already have the last 6 months, and at some point in the next year we have a huge sell-off or a bank failure, something that trips off a deflationary sell-off? Are you concerned that the gold stocks will get hit like they did 8 years back?
Well, Colin, you always have to be concerned to get hit for some reason or another. I would think, as I already stated, I mean, things like a bank failure, a government failure, a COMEX failure, I mean, all those things would, I think, be incredibly positive for gold. The stock market breaking down would be incredibly positive for gold. So I don't worry about deflation per se. I think deflation is probably better for gold than inflation in a way, because it just tells everybody that those instruments that you're owning, you shouldn't own. And if people realize that they shouldn't have their money in banks, or shouldn't have their money in bonds, or shouldn't have their money in stocks, there aren't many places to go to. And gold obviously has come into play as one of those things that where people should be investing their money. So no, it doesn't worry me that the particular type of events you're describing would happen, because I think they'd be quite positive for gold. I think the negative for gold would be, well, all of a sudden the economy hits escape velocity, which it hasn't done for the last 15 years. And the market is really a bona fide bull market, and people say, well, I don't need to play gold stocks here. I can make my money in the general market. That would be my bigger concern. But, I've been a bear on the economy. I don't believe it's really has anywhere near approached any escape velocity. In fact, I think it's just we're slowly grinding down here, so I don't see that as a probability.
Eric, you're certainly one of the most successful speculators in the mining business today, and I just want to get a very brief background on how you got into the mining sector. I know that's a loaded question and maybe something that can't properly be answered in 1 or 2 minutes, but if you can just give our listeners a brief overview of how you ended up in such a volatile and interesting sector.
Sure. Well, I mean, being in the resource sector is kind of natural for people who are invested in the Canadian stock market, which I am. So whether it's oil and gas or uranium or copper, lead, zinc, and or precious metals, I mean, you always have to have them on your list because they're such a big part of our general stock market in Toronto. But specifically in terms of getting involved in precious metals, the really important time for me was in 2000 when I realized, oh boy, this NASDAQ's going to crash here. I'm a long-only fund manager. What am I going to do to protect my long-only investors? And I thought, well, I got to get into gold stocks, and I got to open up a hedge fund so at least I can be short the market. And it was that, desire to protect the positions that got me into precious metals. I realized that in a bear market, there's only one thing that works, and that's gold and silver and the shares. And of course, the UE index was at 35 then. I think it went to like 670. I think it was up 1,700% from 2000 to 2011. Of course, it's gone down a lot since 2011. In fact, this year got down to just around a little under 100. It's currently 270. So it's had a good rally this year. But I mean, it's been the place to be for the 15 or 16 year period that since I really got pushed into the precious metals.
We're witnessing a bit of a rotation of capital taking place in the mining sector, whereby a lot of the money that's been deployed in the majors and the mid-tiers is beginning to trickle down into the exploration companies, and I think that this is something that's pretty normal in the beginning stages of a bull market. I've noticed in particular with your investments some public announcements of involvement lately. There was Newmarket Gold, and then a very small company that you just took a controlling position in, which is of keen interest to me because we're one of the largest shareholders as well, and it's called Latin American Minerals. If you want to touch on that story specifically, but more so just talk about what you're doing with your capital and if you are indeed seeking out these smaller micro cap companies for your money.
Sure. Well, Colin, you're absolutely right that I have invested a lot of money in some producers. I have a lot of money in Kirkland Gold. I put a lot of money in Newmarket. I just made a big investment in Jaguar, and those are all producers. And that's what my first step was to get involved with some producers. Latterly, I've decided to look at some kind of like near development companies where somebody has an interesting deposit and or could be in production quickly. So that would fit in with the Latin American investment. Now, mind you, it was a very, very small investment. Stock had done nothing. Everything else had gone up 150%. It was not that difficult to call. It was a very, very minor investment for me. But you look at what else has gone on around. You think, well, hold it now. This company theoretically has a deposit that could be commercialized, so I'm willing to take the bet on it. And if I had a theme today about what I'm presently doing, I am looking for exploration plays. I'm looking for places where somebody could find something big or has found something big, or the market doesn't realize how big it is, or it's a modest size, but there's lots of prospects for it's getting significantly larger. Because I think that's where the really huge scores are going to happen in the whole precious metals sector, because those things got so wrung out. I mean, I used to have companies come in to me and say, well, I'd say, what's your market cap? Somewhere between $2 and $5 million, right? And that's everybody's market cap was between $2 and $5 million about 8 months ago. It didn't matter what prospects they had. So if you could sort of determine the one that shouldn't have been $2 to $5 million and put an investment in it, you can you can make many times in your money in situations like that. And there's been a huge rally in these exploration companies, and I've been lucky enough to have bought some of them. And I mean, I got some that are up 500% already, and things that I probably hardly even know I have because I bought them in the depths of the market, and maybe I was just trying to help a friend along who needed some money to survive. And all of a sudden, the market's embracing these things. So I think there's lots of opportunity there, Colin.
Eric, in an interview you did just a few days ago with the Daily Coin, you stated a truism about this market that some of the worst stocks are the ones that have gone up the most, which begs the question, as an investor, should you really be using a lens of some type of fundamental approach to the deposit, or should we just be looking for stocks that are still at 2 or 3 cents if you can find them and deploying capital there?
Well, I never recommend that latter strategy, i.e. just buy something at 2 or 3 cents, okay? I have no doubt that 2 or 3 cent stock might go up a lot more than the other ones, okay? But it's not investing, that's kind of gambling. And I tend to want to have my cake and eat it too. And so in that sense, if I can figure out that this company is worth a lot more than the market's paying, or its prospects are a lot brighter than the market's seeing, I think it gives you an extra advantage to make an outsized return. So I'm not just buying something pennies on the dollar because it's trading pennies on the dollar. I want to look at the underlying asset and try to figure out, what are the prospects that this could become quite a significant play where, something's trading at $5 million. And for example, at a $2,000 stock price, it might be $100 million or $200 million. Well, that's a pretty good return, in that kind of environment. And of course, I do think gold will go to 2,000. I think silver will hit a new high. So there's lots of things that people can look at to still purchase. I've been just last week bought another tranche of Exelon, which had already I think quadrupled or tripled, and I bought more at triple the price because I don't think the market's adjusted to the price of silver being $20. When you look at how much can they make at $20? It was stunningly different than 16 and 17. So I think it was probably still might be trading less than 4 times cash flow. So why wouldn't I pay this price? So I still think there's opportunities like that if you want to do the research, and by going to company's presentation, and quite often they lay out tables of how much you're going to make at this price of silver or that price of gold, and you can do your own analysis of how inexpensive it is. So I would encourage people to do that because I think there's still lots of inexpensive opportunities in the precious metals area. And most of them, of course, are not the big companies. There are smaller companies that are kind of ignored. But it's never bothered me owning smaller companies because, they all produce the same thing, gold and silver. And sooner or later, they're all going to trade at an equivalent value to each other.
I know it's early stages in this bull market, but have you given much thought to price targets in terms of where gold, silver, the HUI might go? And I ask that question because there's that old story that you make 17, 20, 100, 200 times your money in this business, and then you can go right over the cliff if you don't get your money out. And it's something I'm afraid of, and a lot of investors are afraid of, that how do you know when to start taking money off the table?
That's a tough question. It's an even tougher question in the things we invest in, and I'll tell you why. Because, for example, when silver broke in 2011, it was all orchestrated. So you could be sitting there like I was, and you're analyzing all the fundamentals. Oh, it's going to break out. It's going to go to new high. There's lots of demand for silver. There's a shortage of silver. Somebody orchestrated a raid. It was so documentable as to be ridiculous, okay? And the same thing in 13 with gold going down. It was so orchestrated. And so you never know. How are you going to know, when you're about to get clobbered? You're not, because the fundamentals have actually been astounding for the last 15 or 16 years. But the markets were coerced by people that wanted gold and silver to do certain things, who had more power than those of us investing in them, more money. And more determination. So that's a very difficult thing to answer because I'm kind of hoping that the central banks have lost their power here, okay? And that the commercial banks who are short gold and silver have lost their power. And that, gold and silver can do what they always should have done, which is to be considerably higher than here. So, for example, for me to imagine silver north of 50, that's a layup. For me to imagine gold going over 2,000 in today's environment should have happened long ago. So, yeah, I think all those things are going to happen. And sometimes I would encourage people, okay, well, why don't you go look at a silver stock and put in 50 and see what it's worth, or put in 2,000 for gold stock and let's see what it's worth. And then you'll understand why these stocks are rallying so fast here. I mean, it's pretty stunning that we've had a 170% rally in less than 6 months. But that's because the opportunity is so massive. So I still think there's going to be lots of upside. To answer your question, I don't know when. I don't know when it's going to break. And one of the things I believe is that, yes, the commercials can win the odd day, but they're not winning much anymore. I mean, yes, they have these beatdowns like last Friday. We get this phony jobs report that beat down gold $20, rallies right back up again. Silver rallied right back up again. We have a bit of a beatdown here today with probably a phony retail sales report. I haven't had a chance to review it yet. But they knocked gold down by $7 right at the opening. It'll be real interesting to me to see whether, that we can recoup that gain, because it would be very analogous to what happened last Friday. So there's always an attempt to beat it down, but ultimately, when the stock market opens and people can buy the GLD and the PHYS and the PSLV, and then of course it tends to turn things around, because those funds got to go out and buy gold, and so the paper guys have a tough time when the market's open, because then you get some real buying coming, real physical buying. It's the physical buying that's been winning the day here. So I hope we just continue on upwards here, and I think we're going to have a long bull market, and we'll be shocked. I mean, if we talk, 5 or 10 years from now, we might be shocked looking back at what opportunities lay in front of us at the time.
Well, the market's just opened. I know your time is limited here. I just have a couple additional brief questions. First one, how does this compare to the bull markets of the past in the beginning stages for those of us who haven't been around or can't recall?
Yeah. Well, I mean, I was right there at the bottom of 2000. I was a very, very aggressive buyer. I was a hedge fund and equity fund manager at the time. I sort of, at the time, gold bottomed around 255. I took the attitude in investing, well, what will these stocks be like when gold gets to 400? And it seems like a pretty small thing now, but of course it was a 60% move. And that was a very winning strategy, because, as you know, gold got up to 1,900. So it paid off way more than I could ever have imagined. And it's sort of interesting even to look back and realize that gold moved up by 600%. 600%. And when I say or suggest that gold might go to 2,000, I mean, that's a 50% move from here. Well, what's 50% when you've seen rallies of 600%? I mean, it's no, and when you look at the environment that we're in, the financial Ponzi scheme we have going on, I mean, 2,000 to me should be awful easy. And in most bull markets, when they get going, I mean, the returns are out of sight. I think they average something like 500%. So we're maybe a third of the way through. If it's just a normal bull market, we might be 1/10 the way through. If it's a super bull market, it could even be bigger than that. So we'll just have to stand by and see how big it can get. But I think there's going to be lots left here.
Well, Eric, it's funny you mentioned the idea of what these gold stocks would be like when gold hit $400 an ounce. I remember my father promising my mother a trip to Europe when gold hit $400 per ounce back in 2001 or 2002, and to think that now we're talking about what's going to happen when gold hits $1,400 an ounce or $2,000. It's remarkable how different it is. I'm gonna end with just one last question for you. Are there any other metals besides the precious metals that you're deploying capital into? What about uranium in particular?
Well, I have not been deploying capital in other metals. I've certainly done so in my career on many occasions. But my overarching concern is that the financial system is vulnerable, that we could have a breakdown, although the breakdown may not. I think the central banks will probably prevent the breakdown that should have happened long ago, of course. And so in that sense, if they keep just propping it up, instead of a breakdown, probably what you'll get is some kind of hyperinflation, which can work for other metals too, by the way. It could be quite stunning for other metals. But of course, the primary winners in that are the precious metals. So I've tended to focus my time on that. I think the rewards are greater. There's a big audience of investments to choose from in that area. So I haven't really veered off track. I've stayed with the precious metals, even though I've been somewhat surprised at the strength in other physical commodities. It may be that the physical commodities are saying, hey, you're going to get money printing here, and physical will be better than paper. I mean, that's sort of what I'm reading into that. But of course, the big winner in that is going to be the precious metals. So that's strictly what I focus on right now.
Great. Well, Eric, thanks so much for your time this morning. Hopefully we'll get you back here in another few months with gold and silver at higher prices yet, and hopefully this bull market continues for many years into the future for both of our sakes.
Great, Colin. It's been my pleasure. All the best to you and your listeners.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?